Is Salesforce a buy right now? I put 10,000 of my own money into it. In this video, I'm breaking down exactly why. Using the same 3-step formula that has my portfolio up 92% year to date, beating the S&P 500 by 81 percentage points. By the end of this video, you'll know, is the market time right to buy? Is CRM financially strong? Is it undervalued right now? And what is my exact position? So let's dive into Salesforce. If this type of video helps you, make sure to hit subscribe. I do these breakdowns monthly. Step 1, check market sentiment. Before I buy any stock, I check 3 indicators: the fear and greed index, the volatility index, and put/call equity ratio. Let me show you what each one of these tells us. The fear and greed index at 54, neutral territory. Here's what this means. When we're in extreme greed territory, above 75, I stay away. The market is overheated. When we're in extreme fear territory, below 25, I'm aggressive. This is where the best opportunities present themselves. Right now at 54, the market is neutral. I'm looking for opportunities, but I'm extremely selective. The VIX is currently at 16. The VIX measures expected volatility. Below 20 means low volatility. Calm markets are also could be greed territory, and above 30 means high volatility. I'm cautious, but this is also fear territory. Again, fear means I'm looking to buy. And the put/call ratio at 0.61. This tells us what institutional investors are doing. Traditionally, below 1.0 means we're call buying than put buying, bullish positioning, and above 1.0 means we're put buying than call buying, bearish positioning. I've noticed that above 0.8 turns bearish with lots of fear. I'm looking to buy. At 0.61, institutions are more bullish. That's a check on all 3 indicators for me. They're not ideal buying conditions, but I am willing to buy if the price is right. Step 2, analyze the fundamentals. Now that we've checked market mood, let's see if CRM is a company worth buying. I use the 5-step framework. Let me walk you through each one. Metric 1, earnings per share. This tells us, is the company profitable? CRM's EPS, 6.9. I like to see this above 4. 6.9 is great. Metric 2, revenue growth. This tells us if the company is growing. CRM's 3-year average growth rate is 10%. 10% or above is good with me. Metric 3, price to earnings ratio, PE ratio for short. This tells us if we're paying a fair price for those earnings. CRM's PE ratio is 35. Industry average is 23. So we'll be paying above industry average. As long as it's undervalued on its intrinsic value, I'll be fine with the higher PE ratio. Metric 4, free cash flow margin. This tells us how effectively a company turns its revenue into cash. CRM's free cash flow margin is 27%. Anything above 10% is good. 27% is great with me. Metric 5, debt to free cash flow. This tells us how long it takes a company to pay off all its debt. CRM's debt to free cash flow is 0.67 years, which is less than a year. Exceptional. CRM passed 4 out of 5 of my metrics. PE ratio is a little weak. Overall, I like the fundamentals. Step 3, confirm with valuation. This is where I determine if CRM's stock price is undervalued right now. I use the DCF model to calculate my intrinsic values by taking the free cash flow 3-year average growth rate with a margin of safety to project future free cash flow and calculate that back to the stock's worth today. Let me show you how I do this. I take CRM's current free cash flow, which is $12.5 billion, its growth projections, which is just its free cash flow 3-year average growth rate, which is 30%, and I add a margin of safety. So basically saying I don't expect it to hit 30% every single year. So I'm going to do a margin of safety. I have aggressive, conservative, and neutral. I did conservative for this one, so a 60% margin of safety, or 0.40. Discount rate, 8 to 10% is the standard. I used 8% in this calculation. Terminal growth rate, 3% is the standard. CRM shares outstanding, which is 955 million. Converting that to billions is 0.955. And time projection, 5 to 10 years. I did 5 years. This is going to give our free cash flow values, our present free cash flow values, which is the projection and bringing that price back, your terminal value and your present terminal value. Again, you're projecting and then translating that back. Your equity value is your present value of both your free cash flow and your terminal value added together. And when you divide that by the shares outstanding of the company, you'll get its intrinsic value. And CRM's intrinsic value comes out to $337 per share. With the current stock price at $241, CRM is trading $96 below the conservative intrinsic value. I used to have to calculate or track each intrinsic value independently for each company manually, and I got tired of having to do that, so I built a custom indicator on my own. So it automatically charts it for me in TradingView, so I don't have to do this manually for every single stock. The indicator is not out yet, but I will be releasing a beta version for a limited amount of people. So join the waitlist if you want early access to that so you don't miss it. So we have step 1, market sentiment is favorable. Step 2, good fundamentals. And step 3, $96 undervalued. All 3 steps passed. This is my time to buy. Here's exactly what I did. I got in at the 125 weekly moving average and again at the 200 weekly moving average for a combined total of 47 shares at $245 per share. My target is the conservative intrinsic value, which again is $337. If I'm right and that reaches fair value, that's a 37% gain or about a $4,300 profit. If I'm wrong and the price never reaches the conservative fair value, I will sell when the company's fundamentals change and price exceeds its intrinsic value. If you want to see every position I take, wins and losses, I post them all on my Instagram and Threads. Full transparency. Hit subscribe if you want more breakdowns like this. Thanks for watching.